So let's look at the first question, in which we're going to try to evaluate technical analysis. So, technical analysis, which is defined as the analysis of historical trends of prices, is an important field in finance. Which form of efficiency is this field based on? So, what this means is not so much what form of market efficiency. I'm really bugging with my words. What I'm trying to say here is that this question is not asking you, well, what form of market efficiency is it reaching? What they're trying to say is, in what relation, or to what field is it actually related to? And in this case, because we've discussed everything, because we have our graph to fall on, we quickly see that, well, technical analysis is only discussed vis-a-vis our weak form market efficiency. So it becomes really like super quickly, super duper obvious to us that A is the right answer here. Okay? It's as simple as that. I mean, listen, it's totally false to say that technical analysis has nothing to do with market efficiency. That is not correct. And we know that technical analysis only applies under a weak market efficiency form. It doesn't apply under B, it does not apply under C, and for that reason, it's very obvious to us that A is correct. And it's as easy as that. Once you're able to generate that sound understanding of what actually happens under a efficient or non-efficient market. So let's look at the next question. This one's pretty cool as well. We're telling you that you have observed that every time the Andrew Sisters Music Corp stock rises by 2%, in a week it drops by 3% next week. This observation is consistent with A, the observations is consistent with all forms of market efficiency, B, inefficient markets, weak form efficient markets, semi-strong form efficient markets, or strong form efficient markets. Now we have A to E, we have a bunch of different scenarios, but what I want you to be able to remember is that once again, once we discuss this concept of market efficiency, we're trying to see, well, what type of data is included in our prices, okay? Now we know, all right? We know that under the weak form efficiency, we know that prices should represent, or the historical data should be represented within our prices, such that technical analysis could not happen. You could not do technical analysis. You could not study, as they did here, prices from previous weeks, because we know that prices follow a random walk. The price of any given week should not affect the price of the next week. That should not happen at all. And if that does happen, well, that breaches our weak form market efficiency. And in other words, when a weak form market efficiency is breached, we would say that that market is inefficient. Okay? So by that, just by that simple concept, we were able to define two answers for each other. We know that, hey, if somebody's doing technical analysis and they're breaching this concept of the whole random walk, well, we're definitely dealing with a inefficient market. And we definitely know that if you're studying past prices, if you're doing a technical analysis, then hey, we're definitely breaching the weak form market efficiency rules. And for that reason, this is super important also, that we're dealing with this idea of consistency. We would say that this is definitely consistent with inefficient markets. It's not consistent with anything else. It's like, think about it. It's definitely not consistent with the weak form market efficiency, because a weak form market efficiency consistency would deal or say that historical prices are included into your stock prices, such that technical analysis does not operate or does not work. And for that reason, B is the right answer. All right? Now let's look at the next question, in which we're saying your careful analysis suggests that you can make above normal returns on your investments if you react to a newsletter. All right? If you react to a newsletter and purchase a portfolio of recommended oil company stocks and then hold them until the newsletter tells you to sell. Now, this one is definitely a nuanced question, and I could see how, based on your interpretation and your understanding of literally the English language or just financial concepts, you could be led to two different answers. But what you want to think about when we discuss this idea of newsletter, especially in the field of finance, this is typically related to the company in itself or a industry newsletter. And a newsletter, essentially, it deals with public information. it deals with public information. And saying that if you follow a newsletter, which does not deal with like historical prices or whatever, it's just public information. So if you're following public information and you're using that to make a decision on your investments, well, that would actually breach your semi strong form efficiency. Because, sorry about that. Because under the semi strong form efficiency, we're telling you that all public information is represented in the prices, such that you cannot hedge any sort of benefit from looking at a newsletter or looking at public reports that would actually do nothing for you. So, in this case, which of the following best describes these events would actually be super interesting because we're looking at a scenario in which we're trying to see if it's a violation of any market efficiency. And as I just said, under semi strong form, well, you cannot look at public information to make a sound business decision that would provide to you abnormal returns. So in this case, we quickly really see that the answer here is that this is a violation of semi strong form. All right, this is definitely a violation of the semi strong form. So the answer here must be C. And as you can see, that is definitely true. All right, so C is the answer here. This is a violation of the semi-strong form of market efficiency. Now let's look at another question. We're going through a whole lot of questions. We want to be able to be comfortable with what's being discussed here. So this one says that which of the following is not correct regarding market efficiency? Weak form efficient states that prices reflect all market data, past prices, and volumes. Semi-strong form efficient includes all publicly known information as available in financial statements. All right? Strong form efficient says that prices reflect all information, both public and private information. If the market is strong form efficient, insiders can consistently earn abnormal profits because they have access to private information. Now, this should be so obvious to you because as we discussed previously and in our graphs, we said that efficient markets, so strong form efficient markets, could not have any insider information trading, and all public information, private information, and historical information are represented in the prices, such that even the private information that you feel like would benefit you will not yield any abnormal returns because it's available and represented in the prices. That would be the case. Insider information would only be useful to you in a weak or semi-strong form, okay? That's the only scenario in which that's okay. Such that D in this case definitely is incorrect. It's no way, there's like literally no chance that if the market is strong form efficient, that you'd be able to yield abnormal returns with insider information. That would not make sense at all. Such that you see here, D is definitely no bueno. It's not very nice. It's not it. All right? So now we have the last question, and it's super cool. So in this one, we're saying that your quantitative, oh my God, I do not know how to speak at this time. Your quantitative research team at Technical Investment Strategies LLC reports that they identified a successful trading strategy. Already we have a clear pointer. They identified a successful trading strategy. The team claims that superior returns could be achieved by purchasing Canadian stocks whose prices has increased at a higher rate than the increase in the Toronto Stock Exchange S&P TSX stock market index over the past 6 months. Now that was like a whole lot of text for literally absolutely no reason. But what you want to see here is that they're saying that they found a successful trading strategy based on a comparable analysis on timing, okay? They're looking at one stock over another stock over a certain time period. So just like that, like that's so technical analysis. There's literally no other analysis than that. This is like technical analysis A1, 100%, okay? So you know that by doing this, by following this type of strategy, this would only be useful for investors if we're dealing with a inefficient market. This would only be useful if this breaches our weak form efficiency, which it definitely does. So in this case, we would say that this goes against the stock market being strong form efficient. Hell yeah, that's for sure. We would say that this is against being semi-strong form efficient, for sure. And of course, this would make sense that it would be against a weak form efficient market. So E is correct because A, B, and C are true. They hold true, such that E is the right answer. So in this video, we went through a whole lot of content. We tried to demystify what an efficient market is all about. And we looked at a weak form, we looked at a semi-strong form, and we looked at the strong form. And what I want you to be able to remember is that we're always looking at historical data, public data, and private data. And these different forms will actually have a different relationship to these inputs, these different data points. And that's super important for you to remember. I hope that the graph I made and the visual aid helped you get a better feel of what market efficiency is all about, and that these questions are super relevant in terms of your studying process. You want to know that this will probably be on your exam. Probably not in the same sense, but you want to have a really good intuition and feel for efficient market. Okay? You want to have a really good feel for efficient markets. And with that being said, I just want to be able to help. And if you need more questions, videos, or even help, you could definitely go through my YouTube channel, Ismahelps. You're going to be able to find a bunch of content, and that's exactly why I'm here. My goal is to make education something that is accessible, free essentially, and relatable from the perspective of a student just like you. I want to be able to make this something that isn't, daunting or annoying or even something that's scary. This is supposed to be a really fun experience, and hopefully Isma Helps contributes to that aid, to that mission. I feel like I talked way too much, so hopefully this helped you out. And once again, if you need anything, you could definitely go on my YouTube channel or on ismahelps.com/com308 if you're from JMSB, or ismahelps.com/intro to finance if you're from any school. I'm here to help, and listen, continue studying. You're doing amazing, okay? You're doing great. Have a good one.